Okay guys, it's time to recap the trades we took over the week. Here's a quick reminder that we had overall 4 trades, 2 hit our take profit, 1 hit our stop loss, and 1 ended up closed in break equal. So on Monday, we didn't have any trades, and the reason for this is simple. I'm gonna explain this to you because I believe that you have to understand when you have days when you don't have trades and when you have days when you have trades. So the reason for this is pretty simple. You have to understand when you can just take off your time on the charts and just enjoy the day and wait for tomorrow, because you're gonna have more of these days than you have days when you have trades. So if you understand these days, you can easily just relax and just enjoy the day. So overall, on Monday we had a massive reaction to the upside, and then we had the same reaction to the downside. So for me, it was like the market was keep ranging between Asia high and low. So when the market is ranging between the high and low of the Asia session, I prefer not to take any trades. So for me, this was the first indicator that was telling me, okay, today is our day off. And obviously, we didn't really have any trades. Here's the first trade we took this week. It was Tuesday, and what happened is we were again ranging in Asia session. However, here's the catch. The price created the power of 3. And the power of 3, again, is accumulation, manipulation, and distribution. So this was another reason why I want to take position in this day. Let's see why. Okay, as we already said, we had accumulation, manipulation of this high, and then the price reversed to the downside, creating a market structure shift. After this type of confirmations, then I'm looking for a candlestick that can indicate that what I'm looking for is actually correct. And in this case, this engulfing candles to the downside was the first indication that this trade is valid, okay? So if you don't know what an engulfing candle is, it's basically we have one candle and the next candle is an impulsive candle, which breaks the high in this case and then breaks the low and creates this impulsive movement to the downside. And just the opposite when we have a bullish engulfing candles. So in this case, for me, this was the perfect indication that this trade is valid. The next step I did was identify my area where I want to take this trade from. In this case, what I did was using Fibonacci tool just to find the optimal trade entry for this trade. However, I was actually looking for this indecision candle right here because this was the indecision candle where the price retested on both sides, as you can see right here and then here. So this was a pretty strong candle for me. In this case, I was already ready to take this trade from this area right here, my stop loss above this high, just to make sure and give the trade some room to breathe and to move. Now, what I like to target is the liquidity. So our execution is as important as our entry. If you don't have an execution plan, you're literally setting yourself up for failure. And you have to know where you want to get out of a trade so that you won't find yourself on the opposite side of the market. So in this case, I was looking to target the previous daily low, which was just right here. So this was my sell side liquidity, previous daily low, as sell side liquidity at these coordinates. This is where I was expecting the price to reach to and break these lows in order to continue this downtrend. However, the price had something different in mind, and this is why we closed at the 50% after the price tapped us in. Overall, this trade was 4-1 risk to reward, and I was looking to close somewhere around here, 2-4. So yeah, we closed the trade early, and I'm glad we did because overall we would have been on the opposite side of the market. Now, the reason I did this is simply because we had accumulation, the price moved to the downside, which I really didn't expect this to happen, and it took this liquidity right here. So the price took the Asia low and then broke above this range right here. This was my confirmation that the trend is actually unsure and undecisive on which direction it wants to go. And in fact, it was pretty decisive. It wanted to go bullish and we were bearish. So this gave me an indication of, okay, it's better to close early rather than to regret later. Okay, so we closed here and then the market moved to the upside. Okay, so here's the second trade we had on this week, and this trade was taken on Wednesday around New York session. So I'm going to explain what's happening in this trade and why it was a perfect setup. Okay, so the first thing I saw was we were reaching a demand zone, and when we reach a demand zone, what happens is the price is either ready to reverse or ready to break below this demand zone. In order to know for us which demand zone is strong as it looks like, we have to look for confirmations. So let's keep it step by step. First, we had our demand, so I think it was around here, and I was looking for this fair value gap. So this was the demand zone I was looking for, some kind of reaction, and above this demand zone, the price had already breached this sell side liquidity. So sell side liquidity at this area. Now, this gave me another confirmation that this trend is ready to reverse. So what I'm usually looking for is some kind of liquidity to be taken out and an area where the price is ready to reverse. So in this case, both of these things were checked from our entry checklist. So we had sell-side liquidity swept, the price moved to this demand area and then started reversing. The first thing I saw was that we created a market structure shift right here. So this was another confirmation that this trend is finally ready to reverse because we got this impulsive move to the upside that created this market structure shift after the price reached our demand. So from this point onward, we have two options: to enter this trade from this order block or to enter this trade from a fair value gap. And in this case, I wasn't really sure which area to take out as an entry point, so I decided to take it from the fair value gap because I didn't want to miss this entry. And sometimes what the price will do is retrace to this fair value gap and then reverse back to the upside without reaching this order block right here. So in this case, we saw the price reaching to this optimal trade entry and then reversing. Now, I wasn't sure if the price is going to retrace back to this OTE, so I was looking to take this trade from this area right here. I believe we took it from here. So yeah, we took this trade from this area and our stop loss was right below this 78%. So the first entry, I was looking to take it from straight from this OTE. However, price moved to the upside too quickly, so we couldn't really get into this trade. And in this case, I was trying to look for another entry where we can surely get into the trade. Now, if you kept this entry, it would be still valid. However, we took this position from this area right here. We took it from this order block. Our stop loss was slightly below the 78% of this optimal trade entry. And then we were targeting the highs right here. Something is wrong actually. Let's see where was actually our entry. Okay, sorry guys. Seems like we took this entry from this order block right here. This was the area where we were expecting the price to reverse to and tap us in. Overall, this was a pretty nice, nearly 5-hour trade. Before that, I sent you a picture that I was looking for the price to reach this area right here and then reverse to the downside. However, things changed. So in this case, I was still expecting the price to reverse around here. However, I want to make sure that we exit our trade with profit. So I was looking to target these areas right here without going further to these highs right here. And eventually what happened is the price breached these highs and quickly reversed to the downside, breaking even these lows right here. So overall, this was a trade we took and it ended up pretty nicely. So again, we had our sell side liquidity being swept. We had a demand area just below this sell side liquidity, and after the demand was reached, the price quickly reversed to the upside, creating this market structure shift, giving us a beautiful order block right here and a fair value gap, which is another indication that the price is ready to reverse, and this is a strong level where we can enter from. And of course, we had our execution plan in place, so our target was pretty nicely, and this is what led to this perfect A+ setup trade. Okay, so here's the trade that didn't really tap us in. This was on Tuesday, and I'll explain why I'm looking to enter when the price is so much further from this area. Let's dive into it. Now, on the previous day, we saw that the price broke this high right here. So our liquidity was swept, we had our X, and then the price broke the structure right here. Okay, so here we had our breakout structure, our liquidity was taken, and what happens after that is we had news around 1:30. So here is where the news started. So this is a perfect smart money example. They look for accumulation, the price ranging for a little bit, and then taking a high and then reversing to the downside. So this is what happened in our case. We've got accumulation right here, the price sweeps this high and then breaks the structure back to the downside. So what happens in this case is the price usually returns back to the optimal trade entry. So using Fibonacci tool, when you extend this tool from the highest point to the lowest point in the market, you can see what this area aligns with. And in this case, when we extended our Fibonacci from this high to this lows right here, we saw that our Fibonacci tool perfectly aligns with this imbalance right here. As you can see, the price hasn't really fulfilled this small fair value gap inside this impulsive move to the downside. Even if you're not close enough to this area, the price can really quickly fulfill this inefficiency and move back to the downside. So this is what I mean. You can see the price action, how quickly it turned to the downside and how much momentum it held within itself. Usually what happens is most of the cases the price reaches this area and then starts rolling back to the downside. However, we weren't lucky this time to get into this trade, otherwise it would have been beautiful. As you can see, we've ranged for some time right here and then the price created this push back to the upside. However, it seems like it wasn't strong enough to pull all the way up to this area and then start started pulling even lower. So this was another trade I was looking for, and I was looking to target previous daily lows, such as liquidities, and take them as liquidity, and the price eventually did that. So it was a pretty great trade. However, the price didn't really include us in this movement. I believe it was around 4R, so somewhere around here we had our previous daily low, some sell side liquidity as well, so I was looking for this area to get taken out. So here we had a trade where we had no tag, it didn't tag us, and it left without us. Okay, so this is what we had on Friday. We had this beautiful trade right here, and I'm going to explain what really happens behind the scene of this trade. Okay, the first thing we saw was price sweeping these Asia lows. What happened after that is the price reversed back to the upside, taking this inducement right here, reaching this order block right here, this supply area right here, and what happened after this is we got this beautiful market structure shift. Overall, so good. However, there was something that I didn't like as much. Now, what I didn't like is this inefficiency that's left right here and here. So when I looked back on the charts, I saw that we've had an area where we have more potential, the price reaching and then reversing to the downside. And this was the area I was really looking for. However, we got our confirmations around here. So I was like, okay, let's see what's gonna happen. So in this case, what we did is we saw the market structure shift, we had our supply area, and I was looking to enter this trade from this order block right here. So we took this trade from this area, we had our entry right here. We also had some inducement that hasn't been fulfilled, so we had this small imbalance between this area. Then our stop loss was right above this high, and our take profit, as I believe, was at this low, because overall I was expecting the price to go even lower as we were still bearish in the market. So as you can see, we had this pullback to the downside. What happened after that was the price breaking above these highs and hitting our stop loss. So sometimes you win, sometimes you lose. This is part of trading, and you have to understand that just because a setup doesn't work once doesn't mean it's not working in general. So you have to be just following your strategy and just keeping good risk management. This is what's going to get you through your trading and through the phase where you're losing trades, where you end up being at a break-equal phase, and where you get actually profitable. Now, many of you may be wondering, why didn't we move our stop loss to break-equal? And the reason for this is simple. In order for me to do that, I want the price to break below 1 to 3 risk to reward. So in this case, I was waiting for the price to move below this area. So after the price breaches this area, then I'm willing to move my stop loss to break equal. But before that, I wouldn't, because you never know when the price is going to retrace back to this order block and then continue back to the downside. I've done this mistake so many times, and I've seen that my strategy really works after the price moves below 1 to 3 risk to reward, and then it's my time to move my stop loss to break equal. So yeah, we took our loss, and then I was looking for the next potential supply area where the market was willing to reverse. Okay, so first thing first, let's see what's happening above this. Okay, as I said, here we have a strong supply area, so let's see what's happening. I will go on lower time frame because I want to show you something that I saw, and I think you'll get it a little bit more. Okay, we've seen the price reaching this area right here, and overall this is the trade that we took, actually, just to show you. This is the price action we saw, and this was the entry in general. So what happened here is that we saw the price kind of ranging right here, breaking this high, reaching our supply area, and then creating a market structure shift to the downside. But what really got my interest is the candlesticks. When I see this type of candlestick patterns, I get this as confirmation that this entry is pretty good, because overall this type of candlestick pattern has done me good in the past, and I believe it will still do in the future. So this was the order block I was looking to take position from. Our entry was around here, our stop loss was just above this indecision candle, and our take profit was at these lows right here, because this was another liquidity that I wanted the price to take out. And generally I was looking for the price to go even lower on the time frames, but I want to get some more confirmation that this is going to happen. So let's see what really happened here. Now overall we got tapped in right here. I believe I was in this trade from this price point right there. However, the price really moved too quickly, so I sent the signal a little bit too late, and for you to give you some more time to actually enter this trade, it had to be from this area. So luckily the price returned to this area twice, so you had the opportunity to be in this trade. Okay, here we broke the structure, the price moved back to this area and then broke another structure. So in this case I was looking to move my stop loss to break equal, and I shared in Discord that we were moving our stop loss to break equal, and eventually the trade ended hitting our break equal. And what happened after that is we can see the price reversed back to the downside and actually took out these lows right here and even further. So overall the trade was good. However, I guess the price wanted to take out this high as well before moving to the downside. Usually I would wait for 1 to 3 to be taken, which here wasn't really fully taken out. So as you can see, this was the reason for me to move my stop loss to break equal, was because we had the market creating 2 times break of structure. So here we had a break of structure, the price reversed and took out this high, which was expected, and then it created another break of structure. So in this case, I was pretty sure that if the price is ready to take out our profit, then it shouldn't really reach back to this order block and continue to the downside. Now, the only option for the price reaching this order block is if it was going to take out our stop loss. So this is the breakdown of this trade. It was pretty simple actually. So yeah, overall we had our break of structure right here, the market reversing here after reaching this supply area. We had all the confirmations. However, the price wanted to take out this liquidity, which eventually happened. So we closed at break equal, which was pretty nice. And overall, this is how we closed the week. We had 2 trades that hit our take profit, 1 trade that was with no tag as the price really didn't tap us in, and 1 trade that hit our stop loss, which was around here. And the final trade of the week was this one, which was an A+ setup. However, the price was looking to take out the liquidity above us and then reverse. So in this case, we had another stop loss for this trade, and eventually we still ended the week pretty strong. We had 5.4 R profit. So this was an amazing week overall. Because we managed our risk well, it led us to a great profit for the week.